Right now, if you pull up the charts, XRP and Bitcoin look like they're doing the same thing. They rise together, they pull back together, they range together. And because of that, it's very easy to look at the chart and say, nothing's changed, XRP just follows Bitcoin. But that conclusion might be missing the most important shift happening right now in crypto. Because while the charts still look correlated, the capital flows don't. The institutional behaviour doesn't, and the role XRP is starting to play inside portfolios definitely doesn't. So in this video, I want to walk you through the entire story, not just the price action. We're going to talk about why XRP and Bitcoin normally move together, what actually causes assets to decouple, and how decoupling always starts invisibly, long before the chart makes it obvious. By the end of this video, you won't just understand what's happening with XRP. You'll understand how to spot a regime change in any market before most people even realise one has started. If you're new here, welcome, I'm Paula. On this channel, we don't chase hype, we don't chase price predictions, and we don't pretend to know what tomorrow's candle is going to do. Instead, we focus on how money actually moves, how institutions think, how structure forms before price reacts. Because if you understand the structure, you don't need to panic at every pullback. And just a quick reminder before we go any further, nothing in this video is financial advice. I'm not telling you what to buy or sell, and I'm definitely not giving you personal investment recommendations. This is purely market education and my own analysis of publicly available information, so you can better understand how capital moves and make your own decisions. And with that said, let's start at the beginning. Before we talk about decoupling, we need to be honest about something. Correlation is the default state in crypto. Bitcoin is still the market's primary liquidity gateway. It's the macro risk anchor. It's the benchmark institutions hedge against. When money flows into crypto, it usually flows through Bitcoin first. When money flows out, Bitcoin absorbs the shock. That means most assets, even ones with completely different use cases, end up moving together by design, not coincidence. XRP doesn't move with Bitcoin because it's the same thing. It moves with Bitcoin because derivatives baskets trade crypto as a group, algorithms hedge exposure through BTC, and macro risk on or risk off flows hit everything at once. So when people say XRP can't decouple, it will always follow Bitcoin, what they're really saying is, I'm only looking at price, not structure. And structure is where the story actually begins. Decoupling does not mean XRP goes up while Bitcoin crashes. It doesn't mean XRP suddenly ignores the market overnight. And it definitely doesn't mean the charts stop looking similar immediately. Real decoupling happens when an asset starts being treated differently by capital allocators, not traders, not influencers, not retail sentiment. Capital allocators. And historically, decoupling always starts with behaviour, not price. This is where the recent ETF data becomes important. In the first full trading week of January, Bitcoin spot ETFs saw roughly $680 million in net outflows. Ethereum ETFs saw around $68 million in outflows. At the same time, XRP spot ETFs recorded net inflows and, more importantly, record trading volume. That detail matters. Inflows can be noisy. Volume tells you participation. What this data is really showing is not that institutions are abandoning crypto. It's showing that Bitcoin and Ethereum are currently crowded macro trends. Capital efficiently is declining at current levels, and institutions are rotating, not retreating. This isn't fear. This is portfolio management. Solana also saw ETF inflows, and that makes sense. Solana is treated as a high beta growth asset, a volatility play, an asymmetric upside trade. Institutions buy Solana when they want movement. XRP is being bought for a very different reason. XRP sits in an unusual position in this market. It's tied to payment and settlement infrastructure. It's increasingly suitable for balance sheet exposure. And its narrative is moving away from speculation towards utility. And that's why the language around XRP ETFs is different. You see phrases like positioning ahead of confirmation and ledger level activity. That's not momentum language. That's infrastructure language. But this is the part that confuses people. If institutions are rotating, if ETF volumes are hitting records, why does the chart still look correlated? Because price correlation is driven by fast money, derivatives, hedging, and algorithmic risk baskets. ETF flows are slow money. Slow money builds positions quietly. Fast money still dominates short-term price action. Decoupling only becomes visible on price after positioning is mostly complete, not before. The first place decoupling appears is not XRP versus the dollar. It's XRP versus Bitcoin. Relative strength. When XRP starts holding value while Bitcoin chops, or grinding higher while Bitcoin ranges, correlation is already breaking, even if the USD chart doesn't show it yet. And here's the counterintuitive part. Decoupling starts with lower volatility, not higher. Accumulation phases look boring. They look frustrating. They look like nothing is happening. That's exactly what institutions want. Watch how XRP reacts to Bitcoin moves. If Bitcoin pumps and XRP stays flat, that's rotation. If Bitcoin chops and XRP rises, that's early decoupling. If Bitcoin pulls back and XRP holds, that's structural demand. If Bitcoin pulls back and XRP rises, that's a regime change. You don't need fireworks. You need refusal. An asset decouples not when it explodes, but when it refuses to behave the way it used to. Ethereum is caught in the middle. It's no longer a clean growth trade, not a pure infrastructure asset, and not a macro hedge like Bitcoin. ETF outflows don't mean Ethereum is finished. They mean capital is looking for efficiency, and right now, XRP is offering something different. Confirmation doesn't come from predictions. It comes from behaviour. Sustained XRP ETF volume, price holding during Bitcoin consolidation, volatility compressing instead of expanding, strength on flat Bitcoin days. By the time XRP breaks resistance without Bitcoin doing anything, the decoupling will already be old news. That's when retail notices. Institutions will have been there for weeks. This isn't a video about XRP versus Bitcoin. Bitcoin remains the macro anchor of crypto. What has changed is this. Crypto is moving from a single trade market into a multi-role market. Bitcoin as macro exposure, Ethereum as network speculation, Solana as high beta growth, XRP as infrastructure and liquidity. When assets have different jobs, they stop moving in lockstep. That's not hype, that's maturity. Here's the one line I want you to remember. XRP won't decouple from Bitcoin when it pumps. It will decouple when it refuses to dump. That's how regime changes start. Quietly, boringly, and then suddenly, obviously. And this is exactly why understanding structure matters more than chasing headlines. And if you want to learn the exact frameworks we use to understand market cycles, liquidity, and capital flow, we've made a completely free course for you. It's called the Crypto Liftoff course, and the link is in the description below. And if you want to be part of a community where normal people actually talk through this stuff properly, that's why we built the Crypto Wolfpack. If you found this video useful, hit like, subscribe. Thank you so much for watching, and I'll see you in the next one.